So, ladies and gentlemen, it's time for us to move on to the next Roundtable 1 discussion, which is going to be on financial freedom in the silver years. Longevity, higher cost of living, and nuclear family setup has put a lot of stress on the old model of saving for retirement. Well, this panel focuses on ideas that can give seniors peace of mind from a financial standpoint. Insurance, reverse mortgages, social support, and government interventions are all part of the solution that set the needs to be created to make sure seniors don't just live longer, they also live better. Well, we are exhilarated to unveil the panel for our discussion, which is going to be on financial freedom in the silver years. And please help me in welcoming on stage the moderator, Mr. Ankur Gupta, co-founder, ASLI, joint managing director from Ashiana Housing. Let's have the applause coming up. And also to join him, we have Mr. Singh Sodi, Senior Managing Director, JLL, to join us on stage. Mr. Upadhyay, President and Head of Retail Liabilities, Retail Trade, Forex, and Third-Party Products at Axis Bank Limited. And Mr. Farouz, Managing Director, Senior Living, Keppel Limited. So over to the moderator. Mr. Ankur, over to you.
With me, Mr. Shailesh Upadhyay, who's head of retail banking with Axis, with liabilities, and also looks after insurance, has lots of experiences in the whole banking and insurance sector. He's been with Yes Bank, HDFC before. I've got Nathaniel, who I got to meet through a friend of mine, and then he was kind enough to take me to China. So he's a French guy who lived in China, speaks great Mandarin, so if you ever want to visit China, he's the right guy for it. And he had extensive experience in China, and now is the managing director of senior living with Keppel Lands. And just from an operations perspective, understanding the landscape, not just in China, I think he understands it in the Western world also very well, and he'll add to it. And I also have Karan Sodi, who's the managing director at JLL, senior managing director for MMR and Gujarat. But most importantly, he heads alternative asset class for JLL. So I'm excited to have it. And luckily, I met Karan in the last ASLI event, and the network helped us to work together also. So I'm glad this kind of an event is helping and creating the right relationships. So one of the challenges we talked about is so as a provider, I remember I was in the US and in the early years, and they said one of the biggest challenges for seniors is if they're going to live 30 years after retirement, how are they going to fund it with inflation going up and incomes not increasing? So that was a big problem. And they thought that by doing a deposit model was a solution because they took care of the largest cost of the senior, which I still don't agree with, but that was their thought. I think we need to find some more creative solutions for it. And one of the things, when I remember when I started senior living about 22 years ago, the first product which came in was reverse mortgage. So just tell me, what's the purpose of reverse mortgage? And it's been 22 years, and I'm still confused how reverse mortgage helps.
First of all, thank you, Ankur, for inviting me to this event. Thanks, Rajat and Tara Living. Before I answer the question of Ankur, let me first extend my finest compliments to all of you who are contributing to senior livings or senior care. I believe apart from earning your living, you are actually contributing to a very noble cause. And I really feel proud that I have come to this event, and I actually get to see so many people who are associated with this industry. Of course, banking as an institution has also been trying to do something different for senior citizens. And I feel it's still a very small thing that we are doing. There is a lot that banking as an industry needs to do. So let me come to the question that Ankur actually asked. So as he rightly said, that for last about 20-25 years, there has been a concept of reverse mortgage. But unfortunately, in the last 25 years, it has seen a very, very little progress. And I would not say that only one party, which is the senior citizens who are responsible for this poor growth or a dismal growth in the reverse mortgage. I would say all the constituents who are supposed to be taking this concept forward, including the banking oblique financial institutions, are equally responsible. But let me begin by first sharing with all of you that there are very few people who are actually aware about the reverse mortgage. While government may have announced as part of their budget presentation about 18, 19 years before, but still there are, I would say, very, very less awareness about reverse mortgage. Those who are aware, I would not say that they have all gone for it. And the very reason that they have not gone for it, because India as a country also lives with this emotional problem that I have not built the house just for myself or for my wife or for my spouse. I have also built the house because I need to transfer this to my children. Even though that child or even though those children may not be actually taking care of them, but they still, most of the senior citizens still believe that they have the moral obligation of providing the house that they built maybe from the corpus that they created over a period of 20, 30 years, and even in some cases, the corpus that got created because of the retirement fund. So the one big reason why reverse mortgage has not really gained, I would say, popularity and success in India is because people really don't want to give up their house. They don't want to live for 30 years and finally realize that this house is sold or is taken away by the financiers. The second reason is that banking as an institution or financial services as institutions are unwilling to treat reverse mortgage different from a regular home loan or a different from loan against property. They do not differentiate for a very simple reason that each and every institution in banking oblique financial services still work on a cost of fund model. So when they go and raise capital, the people who actually provide capital, they do not say that if this capital is going to be used for reverse mortgage, which is for senior citizen, I will charge you less. The second reason is to lure or to attract senior citizens. Most of the banking oblique financial institutions actually pay 65 to 75 basis points higher on the term deposit. So if a regular term deposit is available at 7%, I can bet my life almost all banks would be offering fixed deposits for senior citizen at maybe 7.75 or maybe 7.65. So when you are paying higher cost to acquire fund from senior citizens or from any entity for that matter for funding reverse mortgage, obviously you do not have ability to lower down your cost for senior citizen. As a result of that, there are times that senior citizens don't really find the rate being very attractive or the amount that they will be getting over a period of 20, 30 years being very, very attractive. As a result of that, I would say there is a very, very little progress. But I can vouch for one fact, that if all come together and we start actually popularizing this concept and start creating awareness about reverse mortgage in our community, I still have a hope that over the next 4 to 5 years, from a very, very dismal performance in the reverse mortgage, we can actually move towards a substantial performance. So that's what my opinion is.
Shailesh, I've heard, one this myth that you can't transfer the property to your child. Actually, your child can pay the difference of the money, right? Let's say if it's a crore property and you've taken a 50 lakh loan, with interest it becomes 70 lakhs. The 30 lakhs actually still goes to the child. Is that true?
Yes, absolutely. So let me tell you the point that I made. If the child was so capable, I do not think that the parents will have to really do the mortgage of the property. Okay? So in most cases, where parents are continuously thinking of transferring the property, are those cases where parents believe that my child should not go through the same struggle that I went through before I created this property. And there are not many families where, the child has his own home within the 3 or 4 years of his starting or her starting a career. Okay? So it's actually an emotional dilemma that every parents go through. And you are absolutely right. The residual can still get transferred to the children. But it's not about residual that the parents are actually worried about. It's the emotional connect that parents have with that house that they do not want to leave. They are so obsessed with the fact that since I have built this property with my hard-earned money, if there is somebody who can put a claim to this property is my children. And of course, all of us know that there have been many cases of dispute also where there is only one house, but there are 4 children who are putting a claim to it, and eventually the house actually has to be sold because all 4 of them have to get some share of that house. But if you ask the parents, and of course this happens only after the demise of the parents, if you ask the parents while they are alive, that if you had to sell the house to distribute the money that you will get against this house, the same parents will say, no, I don't want to do that. Even though they know that after they are not there, the house will eventually get sold, the money will eventually get distributed to the same set of children. So I think once people start coming out of this, emotional association with the property that they have created, and they start recognizing that as they have lived a great life for 60 years, the 20 or the 30 years that they still have, they can actually lead a very peaceful, financially able life by doing the reverse mortgage. I think that once that sense prevails, I think the concept will start gaining popularity.
Awesome. Thanks, Shailesh. I have lots of questions for you, but I'm going to move forward on this. Nathaniel, you've been an operator in China in this whole growth phase of Chinese, the aging population, and you've kind of captured it. What did you see? Any gaps in financing? Any solutions they came up with to service the seniors?
Okay, so there is a first financial issue, which might not be the one you're thinking of. The generation that needs senior living at the moment is a generation in China that went through a lot of hardship, a lot of difficult times, and they know the value of a penny. And this is a generation that might be able to afford excellent service, excellent care, but they don't want to spend on service. They're not psychologically ready to spend on service. The next generation, their children, or even the generation in between, is very different. And we have concrete cases where we have to lie to our residents regarding how much their children are paying for them to get access to senior living. Because if they knew how much it cost, they wouldn't agree to move in. Then, this is maybe more anecdotal, but when you look at China, I think same as India, you always have the question of the top of the pyramid. Do they need senior living? If they need it, can they afford it at home with their own ecosystem? Do they need to move into a dedicated facility? Then you have maybe the top 15%, and you have the mass market and people who need social care. And every segment of the population needs a different solution. And at the same time, you have another axis, which is care provision. Are we talking about people who are healthy, active, and are just looking for a community, or are we talking about people who need care? So China solved this issue and these multiple problems in different ways. And I am cognizant of time, so I will probably focus on probably the most creative one, has been sorted out by the conjunction of two things. First, foreign player moving in. Sorry, it doesn't sound modest, but I kind of contributed to this by bringing operational efficiencies. Meaning, before the choice was hyper luxury, very expensive, or very basic accommodation and care where you lie in bed all day long and you look at the ceiling and wait for your last moment. And there was almost no alternative to that. And foreign players, with their experience, their successes and their failures, they brought processes, SOPs, technologies that enabled a new product to emerge with better accommodation, better care delivery, in a very optimized way. The capability to standardize the process, so optimize the cost, while delivering very personalized outcome to the resident, including for high-touch care residents. And this experience was very quickly learned, absorbed, and improved by China. And the second, so better quality at lower cost. And the second thing was how to make it last. And this is where insurance players played a very significant role. It started with one insurance company that was in the bottom 15 players in China, and they were scratching their head on how do we gain market share. And they had this crazy idea to say, okay, we're going to build amazing retirement communities, and we're going to make them exclusive to our members who buy life policies, so life insurance policies, not healthcare policies, life insurance. And so they created senior living as a goodie. Because if you're an insurance company, and I'm talking under the supervision, I know a few of you are from insurance companies, you have access to relatively cheaper cost of capital. And not only it is cheaper, it is also more patient. And using this capital to build senior living business, where we need patient capital and lower cost of capital, became a good strategy and a good investment. And they were using these senior living communities as a marketing hook, as a goodie, to sell more life insurance policies. What's the end result? The end result is that adults, older adults, and their parents are capitalizing to pay for their retirement. The insurance company is able to invest this into their properties and their service. And ultimately, people are able to receive better care, better service in an optimized manner because of the experience gained from the foreign players, and on a sustainable, in a sustainable manner. And once this company started this business, they gained market share, and they're now number 4 or 3 in China. So all the other insurance players, they had to follow. It was a matter of follow or die. So even the largest insurance companies copied the system. So now the leaders in China are insurance companies with these integrated schemes where basically they're making money, they're providing senior living services, but they're making money based on their life insurance business. So they're cross-subsidizing through other businesses. And it's working well, and it has made senior living affordable for the middle class.
And so this question keeps coming. How much of the China market is private pay? How much, like at a care level, does insurance kind of, when these insurance companies are doing life insurance, are they covering care in these homes, or they're generally private pay? Or is public also coming in?
So health insurance is very limited in China. There is a public welfare health insurance, which covers very little, a few hundreds US$ per month, so that is significant for the most underprivileged people, but for the middle class and the upper middle class, this is not that significant, so most of it would be private pay.
Most of it would be private pay. And you've had long, you've seen China. If you were to give an advice to Indian players or to find this funding gap, if tomorrow, if you want to cater to a larger audience, is there any thought you have which we should look at?
It's a bit presumptuous to give advices, but if I can, the market in China really picked up when people were able to deliver a better outcome, a much better outcome with optimized operations. Meaning, again, it's about standardizing the processes to deliver a personalized care and personalized service. And as soon as this happened, the willingness to pay increased. Because as I said, a lot of people can afford to pay, but they're not willing to pay. But when you are able to demonstrate that you're not buying GFA, you're not buying carpet area, you're buying a service, you're buying care, you're buying a community, the willingness to pay changes. So the first thing to unlock is not can people pay or can they pay, is do they want to pay and what are they willing to pay for. And the more you're able to personalize your service at an affordable cost, the better you will be able to educate the market.
That idea that unlocking willingness to pay, people might have the money but may not be looking at spending, and I thought that was very interesting. Karan, you just took out a report on senior living and senior care, and tell me, what do you think as a country we need to do to create the funding gap if seniors have, and what do you see the market demand demographics changing in India for?
So, firstly, thank you, Ankur, for having me and ASLI on this session. So, like Shailesh said, right, I just want to pick up from that, the whole reverse mortgage angle. I think 4 aspects which are critical to be evaluated if there's really the financing needs to be solved. Number 1 is the total quantum. It's stuck at 10 million rupees, 1 crore rupees as a limit. Number 2, the tenure is stuck at 20 years. And people, if we are going to live for more than 30, 40 years, 80, 90, that's going to be a challenge, how you fund that. Number 3 is I can only borrow the reverse mortgage for the house where I live. That's again very restrictive. So to the point of giving inheritance to your children, you need to create something outside of that. Number 4, the interest rate. I think if we can club senior living and senior care as part of affordable housing sector infrastructure, the raising capital becomes cheaper and you're able to then give at a much more effective cost. But that is the solutioning.
Thank you, Karan, for giving us a lot of ideas on pitching on the reverse mortgage. And it's very important. I think a lot of seniors, when, maybe at 60 they don't require it. At 75 they require cash, and then they don't have cash. And this is a great way to unlock it, and you're actually going to the psychology of the consumer to do that. And what about, do you see GST as a big problem in the senior care sector? Is it hampering affordability in any way?
It definitely is. Again, it's strange that hospitals, GST is only 5%. Senior care, senior living is almost 18%, but if you composite structure around 12%. One fact I would like to state is WHO statistics says 3 beds per 1,000 people. India, from hospital beds, is struggling at 1.3 beds per 1,000. It's a huge gap, and which means people need to be treated fast and then given exit fast. But there is always a care component which comes in later, where senior living, senior care steps in. I think that's a critical aspect. The government needs to understand that's also pretty critical, and it's costly. Hospital bills are going way above. Just one statistics, every year people are going so high that 4% of India population is going below poverty line. That's a very scary statistics. Hence, government needs to consider senior care as part of a hospital, and then look at the GST aspect.
And the last part is this insurance piece, where there's the life insurance finding a solution, but it's not paying for care. It's not like do you see insurances coming in and like finding a product for this happening soon?
Yeah, it's the need of the hour. I think medical, healthcare, insurance penetration is only about 34% in India. So I think it needs to be more popularized. That tenure has to be increased, and if you popularize that or package it with some other form of savings, with the FD for seniors, and you throw in the medical care insurance, it should take off.
Interesting. Thank you so much. And last, what do you guys, if you were to look at India 10 years from now, or anything you want to, what's your prediction? What's your thought on the market, and what are the challenges you see and opportunities you see for us?
So my personal opinion is that there is a lot of digital awareness which is being created in the country. And as a result of that, the lack of awareness, which I believe existed 3 years, 5 years back, slowly that gap is actually getting bridged. So as far as senior care and senior living is concerned, I sincerely feel that there is a humongous opportunity that is right in front of us. And when I say it is not necessarily for people who are only involved in senior livings and senior care, I am referring to every other industry which is associated with senior citizen, whether it is banking, whether it is consumer durable, whether it is consumer products company. Every other company has the opportunity. What is most important is that people who are actually aging and moving towards becoming senior citizen, they need to recognize that financial advisory is not necessarily meant only for population which is in the age group of 25 to 55. Financial advisory is applicable even for 65 or 70-year-old people. While Nitin may not have suggested that one should invest in the stock market if you are a senior citizen, but I truly believe that the financial advisor actually does that job for you. When you have a corpus of 100 rupees, he or she can actually advise you to what extent you need to put in where. While there is a misconception, the senior citizens should not take any risk, and as a result of that, most of their money, I would say large part of their money, maybe 90-95%, should be put in the fixed deposit. While I'm in the banking, while I do get benefited by this fact that people keep money in the fixed deposit, and of course we use that money to lend, but my personal opinion is that we will have to build this awareness that you have the appetite for taking risk, and you must take risk by diversifying your portfolio so that you get financial independence and you start funding those basic needs that you have as senior citizen. If my data goes right, almost every senior citizen today needs anywhere between 8 to 12,000 not to actually eat delicious food, but actually eat medicines. Now, if there is a need for 12,000 rupees every month to just consume medicine, I think the preparation for the same needs to start much early, and it must be done with people who actually understand where to deploy your corpus, where to deploy your fund. So on one side, there is a humongous opportunity. On the other side, I would also say that there is a need for us to educate people. There is a need for us to educate them for planning their future as far as finances are concerned much more earlier than what they're doing right now.
From you, Nathaniel, you've now roamed a little bit of India, I guess, and you have the China experience. What's your thought on that?
So I don't have the pretension to tell you where India will be in 10 years, but I can share with you experiences from other countries, and I will leave it to you to decide whether it is applicable or not. But there is a general trend globally where senior living started from two extremes: real estate development on a sales model for independent living, and hospitals for nursing homes for people who have more dependence in it, and on obviously a fee-based model. What we're seeing first is a convergence where the traditional segmentation between independent living, assisted living, nursing home, palliative care is progressively disappearing. It's happening in Asia, it's happening in China. It's also happening in Europe and to a lesser extent in the United States. But there's a convergence because people don't want to get kicked out from their home when they age. And so being able to embed the capability to provide care until the end in places that welcome independent senior is becoming a key differentiator. And as a matter of fact, the emotional decision of moving to a senior living community is also evolving. In countries where there is better welfare, there is better access to doctors, it's become easier to stay home longer. So the question is less and less, do I want to move into a senior living community, but do I need to, and when do I need to? So there is progressively a switch towards sales-based independent living communities toward rental-based, sorry.
I know you're just telling my model doesn't work. All right.
I'm sorry. But rental-based model where people will, even if they don't come to you because they need care now, they come to you because they know you will be able to provide them care in the future, or you're able to provide care to their better half. We also need to solve the issue of uneven dependency needs within couples. So these are trends that we're observing everywhere.
Great. And Karan, in the report, we talked about some 30% growth in senior living over the next, I think, 10, 12 years. What do you see? What's driving the demand? And do you see a challenge in the supply side at all? Is there something as operators, as developers, we need to do?
So I think post-COVID, obviously the awareness has gone high. I think the adaptability, the myth, the social stigma is slowly disappearing. It's taking time, but disappearing. The issue is all the senior living thing, 60% of the market is in South India. So I think that education is required west, north, east of India. From an opportunity perspective, we are expecting 191 million population to be senior category by 2030. Just to give you statistics, pre-COVID, the launches by senior living units was only about 1,100 units per annum. It's now around 2,400 units per annum, but the demand by 2030 would be 2.3 million units. So it's a massive demand mismatch. So I think that's what the room should think about, how we can cater to it, as well as give representation to government to help the sector prosper faster.
Thank you so much. Thank you, guys. I open it to questions. If anybody has any questions for the same.
First of all, very nice panel gotten together. I think a lot of information, very important to this sector is what we got today. Starting from Natalia, I think the operational efficiency leading to cost control, very, very good point. I think that's a very good insight. And moving to Karan, which you also pointed out difficulties of the reverse mortgage. Very nice. The question actually is to you, Shailesh. Reverse mortgage definitely is something to look forward to. You used 2 points. One is the emotional reasons why people don't opt for it, and the second one was how banks find it difficult to raise capital. I think probably, personally, I would want to switch the points 1 and 2, because the second one is the more prominent rather than the emotional, because these new age seniors are thinking differently. They want good things for themselves. So I think that's one switch we need to do. And I think all of us sitting in this room are working in a disruptive industry right now. It's a very, very new place. And I think you are representing the banking. So the question is to you. I think everybody needs to think disruptive now, how to support these people who are coming out. And is it, as per you, it's just I think there are lots of terms and conditions, what Karan also mentioned about, that is causing it difficult for people to opt for reverse mortgage. How can banking make it easier for people, whether it is terms and conditions, whether it is the process that they have to follow for people to opt for more of these things? So that's my question to you. Thank you.
So I'll answer in 2 parts. I really appreciate the fact that banking or financial services companies actually have to do a lot. So the first thing is what Karan highlighted, that today the limit is anywhere between 5 lakh rupees to 1 crore, okay? And it's also not the 100% of the value of the property that the bank is willing to give you as a reverse mortgage. It is generally anywhere between 75 to 80%, depending on the age that you belong to. So the first thing that I believe that banking and the financial institution need to do is to decide as to what part or what percentage of their total mortgage business will be in the reverse mortgage as portfolio. I do not think that we really have a hang of it. We do not know that whether it should be 10% or 15%, okay? While the concept has existed for last about 20 years, but let me tell you, the experience that banks have in this business is not of even 1 year, okay? The portfolio most of the banks and most of the financial institutions have is very, very small, okay? The second problem that the banking and the financial institutions are facing is that Since there is a very low awareness, as a result of that, we also don't come across customers approaching us for reverse mortgage, okay? People who are working as intermediaries, okay, with bank to bring in customers for loan against property or home loan, they also do not have the pipeline of customers who are actually looking for reverse mortgage. So let me just give you an example. If there is a direct sales associate or an agent operating in any large city, if they bring in 100 files to you, I can guarantee you they don't bring even one file for reverse mortgage. The reason why they do not bring even one file of the reverse mortgage, because they themselves are not actually popularizing this concept in the community that they are operating. Secondly, since we are getting fund at a higher cost and we are still constrained by the fact that this is not the segment of customer that you can actually charge more, you have to be a little reasonable. Obviously, the commission that you end up paying to the agent who's bringing in file is also much, much lesser. As a result of that, they do not prefer to get into this side of the business. Rather, they focus on those who are buying new homes or who are buying existing properties where not only bank is able to charge a reasonable rate of interest, but bank is also able to pass on the good commission to the people who are actually bringing in the file. So obviously, all this need to go through change, but at the same time, I would also say that the demand for reverse mortgage is hardly there. As I said, it's not there. You know, people don't come to branch asking for it, okay? And I can also tell you with certainty that if they come to branches, if they start asking to the financial institution, we will have no option but get forced to actually look at this sector with a lot of seriousness, which probably do not exist as of now.
Any other questions? Yeah, there's too many hands. Yeah, this. Yes.
Hello.
We can ask.
My question is to Mr. Shailesh. As you said that, Mr. Karan said that the loan categories from 5 lakhs to 1 crore. Suppose a property is valuating 1 crore at this time. Most of the time banks fund much lesser than the current market value of the property. You fund the loan for next 20 years or so. So why don't bank do consider the 20-year appreciation of the property and give that assurance to the senior citizens where they can have a better valuation of the property and they can get more loan on the reverse mortgage scheme?
So two parts. The good part is that as per regulations, we are supposed to assess the value of the property every 5 years. So it's not that the bank once does the assessment and then for 20 years you are locked in, okay? Assessment has to be done every 5 years, and obviously bank does get to know, or financial institutions do get to know that the appreciation of the property has happened, and while they may have considered about 1 crore as price of the property, but now it's about 1.5 crore, okay? Let me tell you the point that I emphasized. Since there has been a low demand, and banks or financial institutions have not yet decided as to what percentage, what proportion of the portfolio of the total mortgage could be under reverse mortgage, okay? I would not say that people have really, as she rightly mentioned, worked in a disruptive manner. We have not come out with very aggressive policy which can actually help us expand the market. As consumers have been very conservative in approaching banks, banks oblique financial institutions have also been very, very conservative while approaching this. The second thing that I would like to highlight, that when you do the funding for a normal house, okay, a new house or an existing house, you know that you are going to get this money over a period of 20 years or 30 years, depending upon the loan tenure. But in case of reverse mortgages, most of the time, the concept that exists is that after 20 years, you have to necessarily dispose of the property to get your money. Banking institutions are not yet, property broker. They have not yet realized this role that they might have to sell the property. They would rather prefer to focus on their core business than selling the property. So that is also one of the inhibition that financial institutions have. Then why should I take the headache of selling the property and recovering the money? In
Sorry,
fact, Ankur made
we are out of time.
Just allow me to complete. Ankur made one right point, that if there is a residual money, it can still go to the children. But bank does not recognize that the residual money can still be given to the children. Banks or institutions still recognize that this money will be given to the children only when I dispose of the property. And that's not something that the institutions are actually willing to really do. Thank you.
Thank you so much. Thank you for coming. I just loved there were 3-4 learnings for me. One idea, you need to unlock willingness to pay. I think India, the largest problem you're trying to solve is willingness to pay. And there are other kickers which can come in, which is reverse mortgage, GST benefits, and insurance kind of coming and playing a role. And that was the most interesting learning for me. Thank you so much, guys. Thank you for the time.
Thank you.
Moderator, to kindly hand over a small token of appreciation from the ASLI family as a gesture of gratitude to all our panelists on stage. We'll all have a group picture together. Okay, so now we'll capture everyone in one frame. I request all of you guys to kindly step forward. Okay, so ladies and gentlemen, let's have the biggest round of applause. Well, if you guys have had an insightful panel discussion, thank you so much for sharing your valuable thoughts. It was quite an interesting session. Thank you so much, gentlemen, for joining us. Thank you. Thank you to the moderator. Thank you.